Trade tensions, partisan politics, and interest rate policies were just some of the factors fueling a volatile trading environment for 2018. For a look at what could move the markets and affect your investments this year, SunTrust Chief Market Strategist Keith Lerner is here to sift through the tea leaves. Welcome again, Keith.
Good to be back. Good time to be back. A lot going on.
Definitely a lot going on. Before we get to 2019, though, I've got to ask you about 2018. It was one of the worst showings for stocks in a decade. What happened?
Well, first, when people say it's the worst showing for a decade, I want to put a little context for that.
Okay,
because
help us out.
First of all, for the S&P, the U.S. stock market, we were up for 9 straight years, which was tied for a record. And we were down, less than 6% for the year. The last time we were down was the crisis, which we were down over 30%. So I think you have to have context. We've had a huge run since that time. So listen, it wasn't a great year. A lot of the decline happened in the last month of the year. But again, I think some context is in order, and markets don't go straight up.
Yeah, you're right about that. That was a little painful, though.
It was painful towards the last couple of weeks of the year.
Yeah.
Which is atypical during, especially in December, tends to be a good month heading into the holidays.
Right.
So I think investors were caught off guard with that.
So then looking ahead to 2019, the economy was growing really well last year. Do you see that moderating, and the economic growth moderating, and how might that affect equities?
Yeah. So yes, we do think that the economy is going to moderate, but there's a difference between moderation and a recession. I think a lot of times people jump from, hey, we're slowing down to recession, and we just coming off the best economic year we've had in several years. So we expect, instead of like a 3% rate, probably that comes down to about 2.5%. We still think recession risk is relatively low. So the second part of your question is, how does that affect the stock market? One thing, they're connected, the stock market and the economy, but there's leads and lags. And there's also something, a big part of the stock market is expectations.
Right.
And I'll tell you what I think is really interesting about this year, at least heading into this year, is we almost have the polar opposite situation from last year. Meaning, at the end of 2017, we just had the stimulus package passed. Optimism was very high, and we had that strong economy and 20% earnings growth ahead of us, which seems like that would be a great environment for the stock market.
Right.
However, investor expectations were extremely high. And so we had that high bar. So I would say this year, coming into 2019, it's almost this complete opposite. We have economic growth slowing down somewhat, earnings slowing down somewhat. But the positive is expectations are so low, so the hurdle rate for positive surprises is better. So I actually think we're set up for a better year than last year. I still think we're going to have some pretty wide overshoots because of the issues you discussed in the beginning, as far as tariffs, the Federal Reserve, the economy. They're still out there. But again, I think we're set up for a better year because the expectation bar is so low.
Well, I want to talk a little bit about tariffs and trade. And last week, the stocks went up on just the rumor that the U.S. could end tariffs on Chinese imports. Stocks soared on that, and investors seem to trade on rumors as opposed to the facts.
Yeah. Well, by the time the facts come out, typically the market moves ahead. It tries to discount these things ahead of time. It's difficult in the Twitter world that we live in. The headlines can change from day to day. I'd also say an important point just on tariffs, or the things that people are concerned about from a market perspective. It's not a one-way risk, because if people start to price in a worst-case scenario, and that worst-case scenario doesn't happen, then that's upside to the market. Conversely, like early last year, people were pricing in everything being great, going forward, and those expectations weren't met. So it's all about expectations when you're investing in the stock market.
Are there specific sectors that you guys are bullish on?
Yeah, so the way we're thinking about this, we certainly think the volatility that we saw last year will likely continue. We'll have overshoots to the upside and the downside. So we want a combination of offense and defense. On the offense side, we like things like technology, which people tend to pay up for companies that can continue to grow even in a moderating economic environment. We like the industrial sector, which would benefit if we have some relief on the tariff side. And then we have some things in the portfolio that are less dependent on the economy, like healthcare or consumer staples, because we do think it's going to be a tug of war at times, but ultimately we think the trend will be higher for the year.
Sounds good. Well, thank you for clarifying all of this. Gives us another perspective as we look at the tea leaves. Look forward to having you back for the next time.
Thanks. Great to be back as well.
Well, coming up, Atlanta United's new head coach is feeling good vibes from the Champion Soccer Club. And a look at what's happening in and around the city of Atlanta.